Good morning and welcome to another live technical analysis session. As usual and as always, we'll be starting off with the euro against the US dollar. So, starting off with the euro against the USD, we can see that it is moving in relatively upwards fashion. Now, one reason could be Fed Chair Powell's comments yesterday, on which he implied that the three recent inflation readings may be implying that the bank is making progress on combating inflationary pressures in the US economy. Now, what that means is essentially that the bank may be preparing to cut interest rates sooner rather than later, and as such may weigh on the US dollar whilst providing support for the other currencies. For example, providing support for the euro, for the loonie, and for cable as well. Essentially, the dovish remarks may be interpreted in the FX market. So for the euro, there is a bit of an issue, however. We're noting that France is preparing to enter a caretaker government. So as you remember, the elections that happened for the France's parliamentary elections, essentially, upon which we saw the left-wing alliance come in first, taking a surprise win over Marine Le Pen's far-right party, the RN. Now, given that no party has a clear majority in parliament, it essentially has to work with other political parties in order to form a coalition government. Now, due to differences in their own policies and essentially their promises to their voter base, we're seeing that there hasn't been any, well, I'd say significant progress towards that direction. As such, up until they reach coalition government, so an agreement, a caretaker government will be put in place. Now that is a bit of an issue, as it may cause political instability, and should no government be formed, we may head for another election round that could increase political instability within the European Union for essentially the Eurozone, and as such could weigh on the euro. For now, from a technical point of view, if I'm not mistaken, this could be a golden cross, the crossing of the 50 moving average above the 100 moving average line implies a bullish outlook for the euro against US dollar. Furthermore, we have an upwards moving trend line on our daily chart, in addition to the RSI being at 65, implies a bullish market sentiment. As such, the next target for the bulls appears to be the R1 resistance line of 1.0915, and then higher than that, we have 1.0980. So we're noting two targets for the bulls. Now, if the bears take control, at least temporarily, and break below our upwards moving trend line, then we might see the euro move in a relatively sideways fashion between S1 and R1. So we have S1 at 1.0860. Lower than that, we have S2 at 1.815. Now, if it does break below S1, we would switch for a bearish outlook, taking aim for the bears being at S2, 1.0815, as we mentioned a few moments ago. If we drop down to the 4-hour time frame, we can see that that upwards moving trend line that we had mentioned on the daily chart continues to be validated. As you can see, the recent price action dipped lower, potentially creating a swing low, so a higher low at this point, before taking aim once again at 1.0915. So it needs to break above R1 for our bullish outlook to be maintained. The RSI on the 4-hour chart is at 63, which does imply a bullish market sentiment as well. And if you look at the Bollinger Bands tilted towards the upside, also implying bullish market tendencies. Such, we maintain a bullish outlook for the particular pair. Now, the euro against the US dollar may have also been slightly influenced, I would say, from the events over the weekend in regards to the attempted assassination on former President Trump. But we're going to be going in depth for gold. So for the euro against the US dollar, we're sticking to the financial releases and the political instability in France. For today, we'd like to note the retail sales rate. For tomorrow, there's nothing too major for the Eurozone, but we would like to note the ECB's interest rate decision on Thursday. And we will be diving into that on Thursday's live analysis as well. So I won't mention too much of that just yet. Moving on to the USD against the JPY. So the sudden drop is what we believe to be a government intervention in support of the JPY. Now, we've mentioned it time and time again for the past month or so. It was nearing intervention levels. It broke new all-time highs. It was moving higher and higher and higher. And it appears that we did actually see, well, we did see in our view an intervention by the Japanese government in support of the JPY. We'd like to note this particular movement here that occurred at 2 p.m. GMT plus 3 on Friday afternoon. So we believe that this was the first intervention, and this may have been a second intervention to support the JPY. Now, there has been no official confirmation of an intervention having taken place, but we would not rule out that possibility just yet. From the 4-hour time frame, It appears to be moving in downwards fashion despite the RSI recovering from 30 and moving towards 40. I think this is simply a retracement before the pair continues on its downwards trajectory. If we move on to the daily chart, you can see that the longer time frame upwards moving channel has not been interrupted. It's still moving in an upwards fashion. Now, the more short term to medium term outlook upwards moving channel has been slightly interrupted, but is still validated barely. So for today, I would like to see the price action close below, signaling a potential shift from the pair's upwards momentum from a short to medium term perspective. Now, if it does close below, we would not be surprised to see it move in a relatively sideways fashion. So, despite some of the technicals implying a bullish outlook for the pair, I would personally switch for a sideways bias between S1 and R1, due to that being of the potential intervention from the Japanese government, such staying between S1 and R1. If it breaks above R1, we would switch for a bullish outlook. But once again, our bullish outlook would be very short term, as we are concerned about another potential intervention from the Japanese government in support of the JPY. Such, if it breaks below S1, we would switch for a bearish outlook immediately. For the bears, the next target could be 154.6, which is our S2 support level. So we have our support and resistance levels. You can take a screenshot, place it on your chart, and monitor it as the day progresses. Moving on to cable, GBP USD. Now we're seeing the British pound having moved higher the past 2 days, so the two trading days, Monday and Friday. Today opening slightly lower, but still from a more macro perspective, we could maintain our bullish outlook. We still have an upwards moving trend line, which I'm readjusting now. The RSI is at 70, applies bullish market tendencies. It's broken above broken above R1, taking aim for R2, which was tested and validated. So we are flipping our prior R1 and is now S1. We're keeping R2, which is now R1, and R3 now becomes R2. So we need to readjust our support and resistance levels. From a 4 hour time frame, it might be easier to see this change. So as you can see, broke above. I would actually readjust my support levels slightly as well. So taking this peak here, validated at a prior time as well. Then for my S2, this swing low essentially, you can see the price action having broken above. This bullish candle opened, came back down, tested it, and then moved higher. So maintaining a bullish outlook. So it appears to be a significant support level. Now, as I'm looking at it, it does appear that S3 with S2 is relatively close to each other as well. So perhaps we could readjust our S2 level, our S3 level just slightly below. So I've placed my S1, S2, and S3. 1.2890 is my S1. 1.2780 is now my S2. 1.2660, and I'm going to be adjusting that support line, will be my S3 level. But before we fix the text labels, we need to find our resistance level at R3. So we've kept R2 and R3. So this was an old high, validated. This was R2, validated again. That's good. But now we need to find resistance level at R3. So we're leaving at around 100 pips in difference between our support levels. So that's okay. We need to reflect that as well. And I think 1.32710 does appear to have found support. Yes, so that would be tested once, twice. So that does appear to be a resistance level. It needs to be tested before we can say certain that it is indeed a resistance level, but I would place it at 1.3270. 1.3270, yes, that is correct. So that is my R3. This becomes R2. So this becomes R1. And we're going to be placing this. This becomes R1, so this should become R3. So we have our resistance levels here. 1.2995, that is R1. And then for S1, 1.2890. for S1, for S2, 1.2780. And then 1.2660, as we said before, for my S3. And then 2660. So I have S1, S2, S3, maintaining a bullish outlook for the particular pair. Moving on to Intel, so we were slightly bullish on Intel. As you can see, it's broken above resistance level, taken aim for a second, having broken that slightly. So we're now opting for a bullish outlook for Intel stock price. Microsoft appears to be recovering slightly, so potentially in exiting long positions, retracing lower back down to S1 of 442.12. But still, from a general perspective, we are maintaining a bullish outlook for Microsoft. Though for the next, I'd say 2 days, we might see a slight retracement back down to our S1 level. Moving on to gold, we drop down to the 15-minute time frame. Appears to be moving in an upwards fashion. 4-hour time frame bullish, so all-time high figure 2,450. That's for gold. We need to readjust our support and resistance levels as well. So 2,392, that could have been, that is now our S1. 2,000 and 2,350 as S2, 2,320 as RS3. So we're essentially allowing about $30 movement between each support level. So we're going to be reflecting that higher. So 2,480 for S2, for R2, and then I'd say 2,510 for my R3. So 2,450. Now it does appear to be taking aim at its all-time high figure. So now is the time to discuss what happened over the weekend. There was an assassination attempt on former President Trump. The shooter has been, according to media outlets, has been eliminated, so that threat is now gone. The issue was the security measures taken by the Secret Service, but that's a political level, that's entirely different. Essentially, the attempted assassination attempt increases concern regarding the potential line of succession for the US presidency, as Trump is now expected to be the next president of the United States, according to numerous analysts and, if I'm not mistaken, two different betting agencies as well. And it's theory that we tend to support as well. It does appear that he may be the next president of the United States. Now, that could also see a market adjustment, as since the majority of participants are anticipating Trump to be president, that means the US stock markets may reflect his policy, which as a Republican is more favorable to US stock markets, which could provide a boost. Nonetheless, from a technical point of view, gold appears to be moving in an upwards fashion, having formed another upwards moving trend line, as you can see here. Just turning that to something easier to see. Validated twice, so valid upwards moving trend line. RSI is at 76, implying a bullish market sentiment. Next target is the all-time high figure of 2,450. Higher than that, hypothetical resistance level of 2,480, and even higher than that, 2,510, which is another hypothetical resistance level. In terms of support, 2,392 will be our S1 level. S2, 2,350. S3, 2,320. So we have our support and resistance levels. Now, granted, there is a bit of a difference between S1 and R1, which is significant for gold traders, but still, this is the support levels that we do have. Now, one intermediary support level could be at 2,425 roughly, but still I'm seeing significant support, so I would be very cautious about placing S1 here. Could be indeed a support level, but since we're looking at it from a daily point of view as well, might be best to keep that just out just for the moment. But nonetheless, maintaining a bullish outlook for gold's price, taking aim for R1, needs to break that all-time high figure for our bullish outlook to continue. Moving on to Nvidia 15-minute time frame. Let's move on to the daily chart. That was the stock split. Charts need readjusting. That's okay. So the Dow Jones 30 appears to be moving in an upwards fashion. It's nice. Would have liked to look at the S&P 500, but that's okay. We've done gold, we've done the majors, USD JPY, so that's the technical euro, pound, so cable, gold, and then we're going to be looking at oil as well. The Aussie having broken above R1, 0.6715, does appear to be moving in an upwards fashion, taking aim for R2 at 0.6870, retracing back down to R1, which is now support, potentially validating as a resistance turn to support level. RSI is at 59, so it does imply that the bullish momentum may be fading away slightly, but we could also draw an upwards moving trend line, which tends to further support our bullish outlook. So maintaining a bullish outlook for the Aussie as well, USD CAD, and we will be looking at crude oil. So we're looking for WTI cash. WTI cash, there we go. Let's place our template that we already have. So we can right click templates and then what we have for 2024. So let's move on to the daily chart. All right. So for oil, we've seen that it's broken below the mid-range of the Bollinger Bands. RSI has dipped below 50, implying a potential shift for a bearish market sentiment. It's broken, I would say, this support level, which could be resistance, but I would like it to move below before we can place that as an actual resistance level. For now, however, I'm placing R1 at this prior peak here, 83.15. This old peak here as well, which was 87.10. And then higher than that, this old peak here at 90.94. Essentially, we are placing roughly about $4 between our resistance levels, which means we should do relatively the same for our support levels. For support, I would be placing it currently what we've placed, 80.10. Now it is on the support level, so if it does break for our bearish outlook to continue, it would have to break below S2, which we're going to be placing just now. So as you can see, I'm placing my S2 based on the recent price action. You can see an accumulation of buy orders here. Now, regardless of the bearish and bullish candles, you can see there was an accumulation. Once it managed to break above this old resistance level, it turned to support, broke back down, acted as resistance, and now once again is acting as a support level. And we're also leaving approximately $3 to $4 for our support level as well, which tends to coincide with the distance between our resistance levels. That's also a good indication as well. So for my S3, I would have liked to take this prior low, but unfortunately, I will be taking something lower at 71.42. This swing low, accumulation of buy orders and move time. So this for me is a valid support level. Our side dipping below 50, as we said. 50 moving average, death cross crossing below the 100 moving average, applies a shift towards a bearish momentum, bearish outlook for oil prices. It needs to break below S1. Next target is 76.01. That would be my S2, as I've stated before. Now, what we can see, is there anything else that we can notice about this chart? So that was an accumulation. It's breaking below, taking that liquidity. Needs to break below 80.10 within today's trading session for a bearish outlook to continue. Target for the bears could be S2 at 76.0. Let's just readjust that too. Other than that, we have 71.40. We're adjusting this as well. So overall, it appears that oil prices may be moving in a downwards fashion. I would personally maintain a bearish outlook for the reasons I've stated the past few minutes. If you drop down to the 4 hours as well, you can see moving lower and lower, testing support at 80.10. I'm not going to be doing sweet oil. So for the loonie, A bit of a different picture, but still tends to support a relatively bullish outlook. That's nice. So the dollar appears to be gaining against the Canadian dollar, although this could be temporary. This could be a retracement to the mid range, or perhaps to this order block here before continuing on its descent. RSI is at 50, which does imply some stabilization for traders. Personally, I would be placing my S1 at 1.3610, my R1 at 1.373, then this old peak 1.3828 for support. It looks very messy, but we can essentially remove the noise. Let's look also at a potential line chart. Peak, peak, not that close, but double peak and then validate it here. Yep. So if we eliminate sort of the noise and just move to the line chart, you can see that we had a peak here, came back up, broke below, tested, failed, managed to break above and moved higher, and then tested this as a potential support level. So this for me would be my S2 at 1.35208. That would be my S2. And then lower than that, I can see a potential support level being formed. It's too close. At 1.3420. Taking more of a historical data, felt this was resistance, broke below, moved higher, came back down. Concerning that it pierced through and moved lower. But if I place it lower than that, it would be a bit too far away from our support levels. So readjusting at 1.33963, that would be my S3 level. So let's fix this. And then 1.3735. We're going to be going back to the euro in just a moment, as I've forgotten something. 1.3285. P red. And then for my R3, too far away. That's the recent price action. So I will be placing my R3 at 1.390, 1.3735 for R1, 1.3610 for S2, 1.3520 for S2, and then 1.3395 for my S3. So these are my support and resistance levels. And going back to the euro, now if we exclude France, there is another bit of an issue that might be developing within the European Parliament. Now, we're noting that the elections for the EU's parliamentary president are underway. The prior president expected to win. As voting is now underway, I would expect to have a result within the next hour or so. The issue is on Thursday, where Ursula von der Leyen is expected to nominate herself once again for that position. Now, the issue is whether or not she will be able to garner those votes. If she does not, and we see a change in the guards, essentially somebody else taking over that position, that might be a bit of a concern for the euro in combination with the, I'd say, now political instability within France. The markets may have been trading the results from France as a positive news, so no party gaining a clear majority. But the longer France remains in a caretaker government, the worse it's going to be. So that might be a bit of a concern for euro traders for the rest of the week. So we've done the euro, we've done essentially the majority of pairs and commodities that I'd like to do. And with that, I think that does it for today. Thank you very much for watching. For tomorrow, we would like to note the UK CPI rates, which are due to be released at 9 a.m. GMT plus 3. So during the early European session, that's something to look out for. And we'll be going in depth over that financial release during tomorrow's live session. Thank you very much for watching, and I'll see you all tomorrow.
We're going to be talking about how you can set up your training journal, and a couple of important pointers as well. So before we get started, as per usual, a risk warning: our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suited for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. Redistribution. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I am an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're gonna talk about how you can get the most out of your My FX book. We're gonna talk about optimizing your strategy. So what's the best days, best times, best techniques as well. And also we'll be talking about the best direction. So how exactly you can do a bit of trend trading. Okay, let's get started. So what exactly is a trading journal? So it's basically like a diary, and it's a way for you to track your trading performance by recording all of your trades. So you can start a manual or an Excel sheet, or an automated trade journal. And I'll show you guys some examples in a little bit. So, importance of a trade journal. So before we dive into the specifics, let's quickly touch on why exactly having a trade journal is crucial. So trading journals, as we mentioned earlier, serves as your personal trading diary. So it helps you to track your trades, analyze your performance, and ultimately improve your results over time. So some points on why exactly you should start using a trading journal. Firstly, is to track your progress. So it basically provides insights into your performance and helps you to identify patterns in your trades. This also helps you to learn from your mistakes because you're recording your trades and understanding the reasoning behind them so that you can learn from your mistakes, avoid repeating them in the future. Okay, so this self-reflection is crucial for continuous improvement as a trader. Next is to develop discipline. So maintaining a trading journal instills discipline in your trading approach because it encourages you to stick to your trading plan and avoid impulsive decisions by holding yourself accountable for your actions. So I'm sure if any of you guys have ever traded, you will know how difficult it is to really maintain and stick to your trading plan, especially when it's not going according to your plan. Okay, so next, evaluate strategies. So you can identify which strategies are working well and which ones need adjustment or refinement. So this helps you to basically evaluate the effectiveness of your trading strategies. Manage emotions. So emotions can significantly impact trading decisions. So as I mentioned earlier, when a trade doesn't go according to your plan, um, having a trading journal basically helps you to manage those impulsive emotions by providing a structured way to review your trades in an objective manner so that it reduces the influence of fear or greed on your trading decisions. So this also helps you to set realistic goals and track your goals so that you can stay focused and motivated. Improve decision making. We kind of talked about this already. Enhance accountability. So when you're keeping a trading journal, it encourages transparency and honesty with yourself about your performance, fostering a culture of responsibility in your trading approach. Okay, so let's look at MyFX Book. So MyFX Book is a powerful tool for tracking, analyzing, and sharing your trading results. So from setting up your account to utilizing advanced features, we'll talk a bit about how to leverage MyFX Book to its fullest potential. Okay, so let's start off with what should you monitor in your journal. So typically, a trading journal should include the date and time of your trade, basically the open as well as close, the instrument being traded, so whether it's dollar yen, euro dollar, gold, WTI, position size, yeah, and then direction, whether you're going in for a buy or a sell, entry and exit points, trade result once your position is closed, profit and loss at an absolute level as a percentage of the account size, and your risk and reward. So how can your journal improve your trading? So we briefly talked about this earlier, but basically, since you are able to review your trading activity over various time frames, so daily, weekly, or monthly, it will allow you to find the right trading style, whether you are a swing trader, position trader, intraday, or scalper, and identify your strengths and weaknesses, improve your risk management, as well as have discipline. Okay, so how do you set up your trading journal? Basically, you first have to choose a format, decide on what categories you're going to be trading, followed by capturing trade details, analyze trade performance, reflect on the emotional factors, review and adapt, and maintain discipline. Okay, so these are some of the skills that you will be developing when you set up your trading journal. Performance analysis, learning and development, emotional awareness, risk management, trade planning and execution, accountability and discipline, and confidence building. Okay, so let's talk about these examples really quickly. Okay, so there are a couple of examples that we've included here about how to create a forex trading journal. So this example is in Excel. So by using an Excel spreadsheet, this example over here, mm, so all of these are automated. So this one is manual because obviously you have to type in the data yourself, as you can see in this example here. Okay, but yeah, so this will basically look like this is what your spreadsheet should look like. With the initial, maximum, the date, the profit and loss. Yeah. Okay. Yeah, and then for automated tradings, You can read this website as well. Okay, there are some which are free and some that you have to pay for. Okay, so the manual option is obviously free since you have to set up the table yourself. So it's really up to you and your own trading strategy. Okay, so you can go ahead and take a look at these two websites. Yeah, I'll go ahead and pop these two websites in the chat as well. So the one that I'm popping into the chat now is the manual one. Okay, and then the automated one is over here. So I won't go too in depth into how to set up your automated trading journal because I think if you go into the website, it will tell you exactly how to do it. So yeah, let's just move on. You can also look at Forex book. Okay. Yeah, so these are just some of our recommendations. Of course, it's completely up to you and your objectives when you're deciding whether which of these to choose from. But yeah, these are just some of our suggestions. Okay. Okay. Let's move on. So let's talk a bit about optimizing your strategy. So a trading journal is not just about recording your trades, but also about analyzing them to identify patterns and areas for improvement. So let's talk a bit about some strategies for analyzing your trades and refining your approach for better results. So firstly, let's start off by talking about the best times to trade. So market volatility happens throughout the week and it varies. So we're going to talk about which days tend to have higher volatility and better trading opportunities. And we're also going to introduce economic calendars and how you can utilize them to identify when market volatility is the highest. Okay, so let's look at um, what exactly is an FX news calendar. So firstly, on the left, over here, we have investing.com. And on the right is forexfactory.com, which is the one that I typically prefer to use. Yeah, but they're basically about the same. They give you the dates that you're looking for. You can filter the dates. So if you're looking at this week's economic data releases, you can just filter it to look at this week or this month. And then as you can see from these little colored calendars, it also filters by low to high impact events. And it gives you the forecasted values, the previous values, as well as the actual values once the data is released. Okay, so these FX news calendars are important because it allows you to see at one glance all of the important economic data releases. And these data releases often create more volatility in the markets. So it's important to take note of them. So it shows you the key events such as the GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. Okay, so let's understand some high impact events. Firstly, we are looking at the US. So FOMC meetings are the Federal Open Market Committee, and this is the US Fed's way of communicating their view on monetary policies. So these normally come together with a Fed interest rate decision. So if the Fed is dovish, the USD is bearish, and if the Fed is hawkish, the USD is bullish. If interest rate goes up, the USD is bullish, and if interest rate goes down, the USD is bearish. Okay. Next we have NFP or non-farm payroll, which measures the change in citizens that are employed from the previous month, excluding the farming industry. Unemployment rate measures the total unemployment of workforce that is seeking active employment from the previous month. Okay, And now crude oil inventory. So these measure the weekly change in the amount of crude held by US firms. So if crude inventories increase, they are inversely related to oil prices, so we can expect oil prices to drop. EIA is Energy Information Admin, and this is a short-term outlook. So it's basically the monthly forecast for the year ahead, the demand and prices across major fuel types. Okay, so some benefits of using the FX calendar. Depending on your individual trading style, it can help to plan trades and allocations for the day, week, or month ahead. And it also helps to alert the individual to upcoming important news events that may affect volatility. Let me know if you guys have any questions so far. Hey, if there are no questions, let's move on. Okay, so now we are getting into kind of the fun part. We're gonna talk about some of our favorite techniques, or some techniques that you should maybe take note of. Firstly, of course, I'm just gonna touch really quickly on this because we recently finished our Fibonacci series. So if you missed that, I think it's probably uploaded on YouTube, but if not, you can email IronFX on their website and they will probably send you the recording or give you the link. Yeah. So I'm just going to briefly talk about the checklist and what things you should look out for. Okay. So for Fibonacci, there are a couple of steps. Firstly, is the market structure clear? So you want to look for big zigzags, and we want to see, a very clear market structure, so a clear up or down. Okay. Yeah. So next, identify the recent trend. So are prices going down or up? So it's important to always follow the general trend. Next is to identify recent major swing lows and recent major swing highs. And lastly, connect the two extreme points from the highest to lowest for a downtrend and the lowest to highest for an uptrend. Okay, so let's move on. Next, which is quite important, is your take profit and stop loss levels. Okay, so for um your take profit and stop loss levels, it's important to place your stop loss beyond a key confluence level, or if you look here, a key major resistance level. So in this case, we are going in for a sell since our take profit is below. So since we're going in for a sell, we will place our take profit before any levels. So in this case, it will be above any major support level. And for stop loss, we will place it beyond any major resistance level. So in this case, we're placing it above. Okay, so the reason for this is because price is attracted to such strong areas of Fibonacci confluence, or even if it's just multiple swing high levels that line up in the same area, that's also a major resistance area. So price is attracted to these areas. So if your stop loss is right before these areas instead of beyond it, you will most likely get stopped out before the market reverses. So like you can see over here, we would most likely get stopped out if we had placed the stop loss slightly below. Okay, for take profit, we typically recommend to place your take profit before a key Fibonacci confluence area, because when price reaches any significant area, there is a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss, And this is one of the reasons why people complain that the market is being manipulated, because they might miss that take profit by 1 or 2 pips. Okay? So now let's talk about another technique, which is the trailing stop loss. So in our previous slide, we talked about we go back. So this is kind of a fixed stop loss template. So if we talk about trailing stop loss, it's a type of stop loss that is set at a certain percentage or dollar amount away from the market price. So the idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe. So basically, it means that the stop loss basically follows the market price as it moves in favor of the trade. So the example I have here is we're talking about stocks, but the idea is pretty similar if we're talking about currency. So let's say you buy a stock at $100 and you set a trailing stop loss at $10. As the stock price rises to 110, the stop loss will follow, now at $100, since 110 minus $10. So if the stock price drops to $100, your stop loss will trigger, selling your position and protecting your profits. The trailing stop loss technique can be useful for traders because it allows them to manage risk and lock in profits dynamically as the market moves. So this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that a strict trailing stop loss is not a guarantee that you will exit the trade at the desired price. Market conditions such as gaps or rapid price movements can trigger a stop loss order before it reaches the desired level, leading to an unexpected exit from the trade. Therefore, it's important to use trading stop loss in combination with a solid risk management strategy. Okay, I just realized I didn't show you guys the FX news calendar that we like to use. So let me do that now. Okay, so earlier I talked about Forex Factory being one of the FX news calendars that we like to use. So if you click on the date, so when you go into the page, it looks like this. And clicking on the date, you can select this week, apply settings, and you get the whole list of news events for this week. So if you click on this green icon, you can see that I've filtered it to only the high and medium impact events. But you can select all, you can filter out the currencies that you're looking at and the different event types, apply filter. And yeah, you can see once the actual result is released, it will update. But it will also give you the forecasted values, predicted values, forecasted as well as previous values, and the currencies as well as the different times. Okay. Okay. Also, if you weren't here for the Fibonacci webinars, you can also go onto forexalme.com over here. Okay, and you can click on trading guides. How to draw Fibonacci retracement correctly, and it gives you a pretty in-depth explanation on how to draw Fibonacci's. So we have a couple of videos for you to watch as well. What to look out for, unclear and clear market structures. Yeah, what to look out for, checklist. Yeah. So there are also different techniques for Fibonacci. So we're going, I think in this in this guide, we go through each of them. So we have retracement up above there, as well as the different um, other Fibonacci techniques. So here we are combining them in order to find Fibonacci confluence levels. Yep, so feel free to go ahead and take a look. Okay, let's get back to my slides. Okay, so let's look at the different methods of trailing stop loss. So here's a summary of the different types of trailing stop loss methods that we'll be going through today. Just really briefly, firstly is the moving average indicator, followed by parabolic star, chandelier, ATR indicator, support and resistance levels, and a combination of these methods. Firstly, we'll start off with looking at the moving average. Okay, so you can see that using our MA, the trailing stop loss is triggered when price basically breaks out of it and moves above the moving average. So I think that's pretty straightforward. You can see in this example as well that it got us out before price started to increase. If we look at a trend line breakout, okay, actually this line here is kind of a trend line breakout. The only issue why we can't call it a trend line breakout is because trend lines have to have a minimum of 3 touches in order to be considered valid. And you can see in this case, we only have 2, okay, before price broke out of the trend line. So when price breaks out the trend line, that's typically a sign that price is going to move in the opposite direction, which it did. So when it moved in this downtrend, so we went in for a sell entry, and then placing this trend line here, we got out when price breaks out of the descending trend line. I think that's pretty straightforward. So let's look at parabolic SAR. So kind of the same concept. Here you see when price moves below the parabolic SAR, it's typically giving us a bearish signal. So when price begins to move above the parabolic SAR, you can see that it's moving above it. It's even broken out of the top, the upper, uh, the upper side of the indicator. Okay, so that's a sign that trend is going to change. Okay, chandelier and ATR, same concept as well. Price is moving below, giving us a bearish signal. Once price moves above or breaks above these indicators, then both of them are triggered and our stop loss, and we get out of the trade. So I think that's pretty straightforward because all of these concepts are pretty similar just by using different indicators so that you can kind of substantiate your analysis to show that, okay, price is really breaking out over here, the trend is really changing, so I should get out of the trade. Okay. In this example, so this is just another example. In this case, we have a fixed stop loss. You can see it's a fixed stop loss at the swing high. Our sell entry is here when price breaks below this line. And also it's moving below our moving average. Here's our take profits over here. So you can see instead of just leaving our stop loss here, which you can see is really far away from where price is currently at, by using a trailing stop loss, we can get out of the trade right when price breaks above this level here. Similarly, in this case, price is breaking out of this descending trend line. Stop loss is placed slightly above. Like we mentioned earlier, stop loss should be placed beyond, take profit should be placed before. So we're going in for a sell entry and going towards a take profit over here. Okay. Okay, now let's look at using breakouts as trading stop loss. So breakouts are usually high volatility events, and price can spike up and reverse almost as quickly. So a stop loss will help you to manage risk, protect your capital, and a trading stop loss can help you to protect your profit like we've seen in the previous slides. Okay, so let's move on to our next technique. Okay, trend trading. So here's a super simplified breakdown of how trend trading works. Firstly, you want to identify your trend. So in a price movement of a currency pair. So this is typically done by analyzing historical price charts, and an uptrend is characterized by higher highs and higher lows, while a downtrend is characterized by lower highs and lower lows. Okay, so entry points. Once you have um, identify a trend, the next step is to find an entry point. So in an uptrend, you might look to enter a trade when the price has retraced or pulled back slightly from its recent high. So basically, you're anticipating that the trend will continue. But in a downtrend, you might look for a retracement before the price continues its downward movement. So next we have setting stop loss and take profit levels. So to manage risk, it's crucial to set stop loss and take profit levels. So stop loss is a predetermined price at which your trade will automatically close to limit potential losses if the market moves against you. So a take profit level is where you decide to exit the trade to lock in profits before the trade potentially reverses. Number 4, riding the trend. So once you're in the trade and the trend continues, you aim to stay in the trade as long as the trend remains intact. So basically, in this situation, you would be monitoring the price movement and adjusting your stop loss and take profit levels if needed. Or you might choose to use a trailing stop loss that we just went through as well. Lastly, exiting the trade. So this typically happens when the trend reverses. But yeah, trends don't last forever, so it's important to be vigilant and not get too greedy. And remember to decide to exit your trade and take your profits where possible. Practice analysis. So I think that's pretty self-explanatory, so I won't get into that. Okay. So pullback support and resistance. So these are pretty basic trading knowledge, I suppose. But basically, a pullback support is a strong level of support which breaks out from a previous resistance level, and price is now dropping back to visit it again. So pro tip is when a pullback support lines up with a Fibonacci level, it tends to be very powerful. Pullback resistance, on the other hand, works well when it breaks a significant swing low and then starts pulling back to it. Even better if there are multiple Fibonacci levels that line up with it. So here's an example. So you can see at the red area, price tested this level 3 times with multiple swing highs in line with one another. And once price breaks the red area, it becomes a pullback support level. Then we expect price to pull back or retrace this level, which you can see from the dotted arrows. And this is an example of a pullback resistance. So you can see once price breaks the level, it becomes a pullback resistance, and we expect price to retrace and pull back to the same level, like you can see from these red arrows. Okay, now pullback resistance. Here we have a swing low and thus a possible support level. With price passing below the swing low support, it is now a pullback resistance. Okay, so if we see in the next slide, you can see that price actually pulls back to this resistance level. Yeah, and once it reaches and reverses off the pullback resistance level, it then becomes an overlap resistance level. Okay, which we will get into now. So overlap resistance occurs when price reacts off a particular level from the top and from the bottom. So the more times that it reacts off this area, the stronger the overlap area. This basically means that there are bulls and bears that are respecting that area, so it's important to take note of that. Okay, so here the pro tip is that if the overlap area lines up with other elements, such as Fibonacci or graphical elements, it will make it even stronger. So that's basically what we call the confluence areas. Yeah, that applies for any support and resistance level that you can find. If you can support it with your Fibonacci, your pivot points, your pivot point indicators, that would be even better. Okay, so here's an example. Basically, you can see how once price breaks below the support at 105.643, you can see how price retraced or pulled back to this resistance level and reversed off of it, making it now an overlap resistance. Okay, here's another example. So here we have a big swing high resistance level. Price surpasses this level and becomes a pullback support where we expect price to pull back to that level. So in the green areas over here, we see price retrace this level and actually bounce off perfectly. So once price bounces off the pullback support, it then becomes an overlap support. Okay, in our second example, we see two swing highs lining up. So we have a swing high resistance. So price has surpassed this level as well and making it a pullback support. Here we can expect price to retrace to that level. So you take note of the blue circles. Price bounces off this level twice, making it a strong overlap support. Okay. Okay. In this last example, we have multiple swing lows that are in line at the 33420 level. So once price breaks this level, it becomes a pullback resistance. We can see price has tested this level 3 times, 1, 2, 3 over here, making it a strong overlap resistance level. And then once price passes again, then it becomes a pullback support. And once it bounces off that level, it then becomes an overlap support. I think by now you guys have gotten it. So let's move on to our last technique. Okay, so how do you identify a trend? Okay, I briefly talked about this earlier. So how you can identify trends is obviously you can just look at the charts and you tend to be able to identify whether it's ascending or it's moving in a downtrend or whether it is ranging. But if you want to be extra certain, you can try looking for trend lines and trend channels. So what makes a valid trend line is if there are at least 3 significant touches. For an ascending trend line, the touches should be on the bottom and on, yeah, so if it's descending, then the touches should be at the top. So here's another example. Okay, you can see the touches on the bottom and here as well. For descending trend lines, it should be on the top and on the bottom, but same thing, we are looking for at least 3 significant touches. So you can see here, we have about 4, and here we have about 4 as well. Okay, so watch out for at least 3 significant touches for it to be considered a valid trend line, like over here. Okay, and you can see on the 4th touch, price is playing the reaction. Okay, so let me know if you guys think that this trend line is valid or not in the chat. Okay, someone said that it's not valid. Yep, so it is not valid because we mentioned that if it's a descending trend channel or trend line, the touch has to be on the top and not on the bottom. Okay, so if we look at drawing valid channels, the valid channels are if there are at least 4 significant touches, 2 at the top and 2 at the bottom. Okay. Over here, this is an example of a descending trend channel. So it doesn't have to be consecutive like this or like this, but just as long as there are 2 touches. Okay, now let's look at the different indicators that you can use to identify the trend. Okay, so firstly is Ichimoku cloud. So breaking down the lines, it consists of several components, and it's basically composed of 5 lines or calculations, 2 of which comprise a cloud where the difference between the 2 lines is shaded in. The lines include a 9-period average, a 26-period average, an average of those 2 averages, a 52-period average, and a lagging closing price line. So the cloud is a key part of the indicator. Okay, so let's look at breaking down the lines. So basically, when the price is below the cloud, the trend is bearish, or the signal over here is bearish. When price is above the cloud, the trend is up, or the signal is bullish. Trend signals are strengthened if the cloud is moving in the same direction as the price. So for example, during an uptrend, the top of the cloud is moving upwards, or during a downtrend, the bottom of the cloud is moving down. Okay, so let's break down the different lines. Okay, we have the Tenkan-sen or conversion line, and this is the average of the highest high and the lowest low over the past 9 periods. The Kijun-sen or baseline is the average of the highest high and lowest low over the past 26 periods. Chico's span or lagging span is the current closing price plotted 26 periods behind the current time. And Senko span A, or leading span A, is the average of the Tenkan-sen and Kijun-sen plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, Senko span B, or leading span B, is the average of the highest high and lowest low over the past 52 periods, plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, explaining the lines. So the first way to use Ichimoku is to identify trends. Basically, the Tenkan-sen and the Kijun-sen. Tenkan-sen is the one in blue, Kijun-sen is the one in red. Those are used to identify the trend of the market. So a bullish trend occurs when the Tenkan-sen is above the Kijun-sen, and a bearish trend occurs when the Tenkan-sen is below the Kijun-sen. Okay, you can also use your Ichimoku indicator to determine support and resistance levels. Okay, now the third way to use Ichimoku is for confirmation. So the Chico span is used to confirm the signals that's generated by the other lines. And if the Chico span is above the current price, it confirms a bullish trend. If the Chico span is below, then it confirms a bearish trend. Okay? So Ichimoku generates buy and sell signals based on positions of the various components. So for example, a buy signal is generated when the Tenkan Sen crosses above the Kijun Sen and Senko span. And a sell signal is generated when the Tenkan Sen crosses below the Kijun Sen. Okay, so how can you effectively use this indicator? So basically, the overall trend is up when the price is above the cloud and down when the price is below the cloud. Yep, and trendless or transitioning when the price is within the cloud. Okay, so of course you can also use support and resistance, as we mentioned earlier. So yeah, so you can see when price is moving below the cloud, it is bearish. When price is moving above the cloud, then it's bullish. Within the cloud is typically transitioning. Okay, another way is price and MA cross. So if you're a beginner, this is a great way to identify moving averages of different periods to analyze price movements and generate buy or sell signals. I won't get into it, but yeah, this strategy basically captures trends and works best in trending markets. Next, we have the Golden Death Cross, which is a strategy based on the intersection of two important moving averages on a price chart. Okay, so I'm not going to explain how the indicator works, but basically, when you see a golden cross, it's a bullish signal. When you see a death cross, then it's a bearish signal. Okay, channels as well. Can see when price hits the sides of the channel, that's typically a sign that price is reversing off of the channel. Okay, so when you are deciding which settings to use for your moving averages, try and make sure that it touches the bottom of the bottom or the top of the price as much as possible. Same for natural moving averages. And a double break is basically when price breaks below the moving average as well as your trend channel. So basically, as I mentioned earlier, when you have an analysis, you want to try and make sure that you use different indicators to support that analysis. Okay? Yep, so that's what we call confluence. You can see in this case, we are using a trend channel, Ichimoku, as well as moving average, as well as your death cross. Okay, you can see we see this price moving upwards. Okay, so to wrap things up, we'll quickly go through the disadvantages of trend trading. So basically, it can give you false signals, late entries, some choppiness as well, whipsaw trades, which basically means that traders enter and exit positions quickly due to volatile price movements, which can result in losses. Limited profits in ranging markets, and it might require timely decision making. And lastly, noisy price data. So to overcome it, you want to make sure that you have all of these in check. And how you can make sure these are in check is by basically making sure that you use a trading journal so that you can track your trades, track your strategies to see what works and what doesn't. Okay, and this is just to show you guys what an unclear market structure looks like. On a 15-minute time frame, you can see it's pretty messy. There's no clear price movements. But when we change to 1 hour, you can see it's pretty clear. Okay, so yeah, so this is just a kind of a rule of thumb to live by. So if the clearer the swing low, the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, that brings us to the end of my slides. Thank you guys so much for joining me today. I hope you guys found this helpful. And yeah, have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.